Almost all participants at the last January meeting for the Federal Reserve agreed on the 25 basis point rate hike. Ongoing rate increases were seen as appropriate by all members of the participants in the Federal Market Committee. 25 basis point hikes were seen as allowing the Fed to assess the economy and the impact of rate hikes as they went along. However, a few wanted to raise by 50 basis points. In common Fed speak, a few is more than two, so there may be another person, or appears to be another person out there other than the two whom we know, Bullard and Mester, who wanted to go 50. They wanted to go 50 because they wanted to bring the Federal Reserve more closer, more quickly to the target where they were trying to get to.
Once again, welcome to the Warlords of Wall Street. Interest rates were basically the story of the day. Interest rates were calming down a little bit today. They were coming off of their spikes yesterday. The 10-year, which is one of my favorite benchmarks, is flirting with 4%, and that's and it tickled 4% yesterday, came back down to about 3.9 today. So we're liking it when it's staying about right there. But on the heels of that, the Federal Reserve minutes came out, and it turns out that most of the Fed governors, including Powell himself, are committed to continuing their 25 basis point rate hike here shortly, and seem firmly committed to continue 25 basis point rate hikes until they are absolutely convinced that the data suggests that inflation is coming back down and will be moving closer to their core target of 2%. I think that the 2% still remains an aggressive target. However, some of the information I'm looking at on what constitutes the core of where the inflation is, it's mostly housing and what have you.
Our risk right now is that inflation doesn't come down or reaccelerates. And then what do? We are going to have to move and react in that environment. And if inflation doesn't start to come down, you risk this replay of the 1970s where you had 15 years where you're trying to battle the inflation dragon.
But Jim, by your own account.
And you don't want to get into that. That's why I've been, let's be sharp now. Let's get inflation under control in 2023.
But by your own account,
and it's a great time to fight inflation because the labor market is so strong.
Right. By your own account, though, the economy has not yet, given the long and variable legs of monetary policy, the economy has not yet felt the brunt of the rate hikes that you've had. So why wouldn't
What about housing?
Once you start looking at housing cooling down, if we get a couple more things in those particular areas, including the automobiles coming down a little bit, I think the 2% is achievable by mid next year. And I think we'll end up seeing some cuts before that happens. So I'm still committed to thinking that we're going to see another 2/4 basis points. That's going to keep our terminal rate somewhere around just under 5%, give or take, or right at 5% on the short-term stuff. I'm still a little concerned about the deviation that we're seeing in the interest rates that you can get for 6 months and, for that matter, 2 years, is they're still paying a higher interest rate in the market than the 10-year. And I don't like to see that imbalance. I'd like to see that everything tighten up just a little bit better. But we'll just have to continue to wait and see. Intel continued to disappoint. However, that's the good news. They decided that they're going to cut their dividend by 66%. That still means that the dividend at today's price on Intel still yields nearly 5% or a little bit over that, depending on where the stock will settle out by tomorrow. But that cut in the dividend provides an opportunity. I have to tell you, although Intel's been absolutely dead money for 20 years, what does dead money mean? It just hasn't gone anywhere. If you invested in Intel 20 years ago, it's not much different in price today, all these years later. And despite Warren Buffett's, the famous sage Buffett and Mund, they would say that buying a good company and holding on to it is the way that you make a bunch of money. And Intel has proven that it just missed the whole boat about microprocessors and got overtaken by the Palo Altos and the AMDs of the world. But interestingly enough, I want you to take a look at a chart on Intel, and you can end up going to our Patreon site. I like Intel if I'm going to trade it somewhere right about where it is right now and to probably just a 29. I see about a 15% profit that can be had on that. It seems to want to bounce a lot right about from right here where we are, just sub 26 and just shy of 30 is where I would play it. So you can go to Patreon. You can look at the charts that our associates will put up there for you, and you can kind of see where our strategy is settling into. Palo Alto came out with its earnings after market. They did very well. It jumped in after hours by as much as 9%. Palo Alto, more impressively, is giving some very positive forward guidance for their particular sector. I like that. With a little more news of what's going on in our portfolio, Tesla came out with a news announcement saying that they're going to keep their engineering offices in California. I think that obviously bodes well for California. I don't know what kind of concessions that Elon Musk was able to wrestle out of California, but I just don't like the tax structure there. Although Silicon Valley has always been very supportive of the tech industry, and Tesla certainly would have to be considered a favored son. I think it would have probably done better to continue to relocate its operations to Houston and other more favorable taxes jurisdictions. But Elon, in his madness, has always proven thus far to be right. Well, that's all we have today. It was kind of a soft day in the market. Everybody was trying to absorb the minutes from the Fed. I don't think that there was anything really substantial that would be a tail would wag the dog anyway. So I think we continue to see just a little bit of bumpiness, and I think it's smart to keep as much of your powder dry as you can. And when you have opportunities like is being presented by Intel, I think the short-term trade, be very cautious with it, and take your money when you get a chance. Try to keep as much in cash as you can, because you're going to have opportunities here and there. So good hunting to you. Keep your powder dry.